in manufacturing now say the sector is in dire straits following inaccessibility of dollars in the market, which has hampered their ability to source imported inputs. According to the Kenya Association of Manufacturers, players are now forced to dig into their working capital to secure dollars in advance, a development which they say is undermining the sustainability of businesses. This concern has also been shared by the Petroleum Outlets Association of Kenya. Judith Cherono now reports.
The manufacturing sector relies significantly on imported imports, a fact which means that they are recurrently in need of US dollars to source the products from external markets. In the recent past, the sector has flagged what it terms as a shortage of dollars in the market, creating a significant bottleneck in their day-to-day operations. In a statement dated May 30th, 2022, and signed by the association chairperson Muchai Kunyiha, the association says that despite this additional demand for US dollars, manufacturers are struggling to obtain sufficient dollars to meet their dollar obligations in a timely manner from commercial banks. The consequences of these are that manufacturers have been forced to plan for foreign currency payments by purchasing foreign currency in advance, resulting in an increase in working capital. The association argues that delays in acquiring the requisite US dollars for imports is impacting members' relations with suppliers, with some now requiring more expensive letters of credit to transact. The association argues that if the current increase in commodity prices continues, it will be impossible for manufacturers to source imports given the shortage of dollars. In a statement, the association says, "The current high commodity prices in the international market have increased the US dollars required to purchase the same quantities of product. For example, before COVID-19 pandemic, crude palm oil (CPO) prices were around $700 per metric ton, but rose to $1,980 in March 2022. Oil, metals, and other commodities and imports have mostly gone the same way." The Kenya shilling has depreciated by 3.2% against the US dollar since the start of the year, with the local unit closing by 30th at 116.71 units. Manufacturers are now calling on the Central Bank of Kenya and the Monetary Policy Committee to propose and implement policy actions that will return the market to predictability. Judith Cherono, NTV Business.